What is going on, everybody? And welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also put out a technical video, which essentially drops on Sunday, where I go over all the technicals of all the stocks that we do discuss in this video and some things that I'm looking at. So again, remember to go ahead and drop a like so we can get the message out there. I believe you should have a good mix between current events and technicals to help you navigate the market. And so that's why I put out both of these videos to give you a good pulse of the market and then slap you with some technicals to help navigate that. So with that being said, like we always like to do around here, we do like to get into what's gone on over the past week and kind of how it feeds into this week and what we're looking at in the next week. So with that being said, this past week, we have to understand, I've talked about this before, is that we are kind of getting into a lull period in which there's not really a lot going on. Yes, we got some big earnings, especially NVIDIA earnings this week that we want to be watching. But the market will be done with essentially earnings at that point. There will be a lot of important information that's continuing to drop. It seems like each and every day when it comes to layoffs, bankruptcies, delinquency rates, all these things are accelerating at a very fast pace. So you have to be mindful that an event can occur at any point and force the Fed's hand to start cutting. This is how it occurred. Again, back in 2008, you got to remember that it can come out of left field and start happening, and when it does, you need to be prepared for that. We don't know if that's going to happen, tomorrow, if that's going to happen 2 weeks from now, 6 months from now, or a year from now. We don't know, but you have to be prepared, especially with the market being so overextended. I think you're putting a lot at risk to be trying to play at these higher levels. And so what I've always done is I've always waited for it to pull back, no matter how long that takes. That's just the way I've always traded and done a lot of swing trading. Is because of that fact is I'm waiting for that setup. Now I do a lot of intraday trading as well, but I am very patient and I wait and see if there's actually a setup. I don't force to try to trade every day. I think you need to be taking a trade every day is the wrong approach. I think you need to wait for your setup and whatever that looks like for you. And tomorrow's video on the technical analysis, I'm going to break down charts and everything, kind of show you how I set that up so a little bit more. So look forward to that. So remember to subscribe for that. So let's take a look at the past week. Very, very crazy week. First of all, we had Roaring Kitty come back essentially out of hiding for what it's been like 3 years since last big run up that they had with GME and the short squeeze that it had. Now, this week, again, he just started dropping some tweets, and then GME, it started running up even going into this week. But when he dropped those tweets on Monday, and essentially had them essentially auto distributed, like first it was every 30 minutes, and then he got to a point it was every 15 minutes. But it was essentially all throughout the week. And we had a huge rip on essentially, I think it was Tuesday or Monday night, where I went from $33 a share, or around 33 to about $80 a share. I was lucky to be able to swing that over that night. That was the only night I swung it. And then I took a very, very, very small position from the profits to swing into this week. But a lot of people were disappointed because after that, essentially what has happened, the massive run-ups that GME and AMC had on Tuesday, it just died off. And again, this is something I talk about the market makers. You can fool them once, but the second time they have a better plan and a better strategy if it happens again. And so essentially what happened is they started diluting shares and selling millions and millions of shares. So that way it made it much harder to get any kind of short squeeze out of it. You have to have much more capital to try to short squeeze it. And so with that being said, again, typically what happens with a lot of these companies and why GME became such a big thing is you have to understand a lot of people, the way Roaring Kitty approached it was very, very impressive. You have to understand when a lot of companies start going bankrupt, a lot of these, larger exchanges, they short these banks or these bankrupt companies down to pennies on the dime, and then they essentially go and they buy them out and run it into the ground. So they're making billions of dollars off these bankrupt companies. And so you have to understand that the catalyst behind what they're currently doing. It's not just, there's more of just let's make a lot of money. It's essentially a battle between retail traders and the big market makers that are out there, and understand that they won at one point, right? And so that is essentially what this is about. And people are, yes, there was a lot of money made, there was a lot of money lost on top of it. There was a lot more money lost than there was money gained back when we had that last run up. And so again, massive run up on Tuesday, and then we've since died off because they diluted the shares. Roaring Kitty is still very well around. He's been putting out memes essentially every day during the active week. Be interesting to see how he plays this. A lot of people think he just died and that was it, and then it was his account got taken over. A big thing, in my opinion, is if it really is him, I think he has a much bigger plan. He's had multiple years to think about this, about what he could potentially do. I think there is a bigger plan if it is him. There's a lot of dark pool action that essentially caused a lot of the selling off. And my thing is what makes everybody think that it's not him that's doing a lot of dark pool action as well? Potentially could be possibility, and we could see some big plays in the coming weeks. And if you want to decrypt all his messages, they are on X. So I would just go out there and find all of them and follow his account. It's a very interesting. Like I said, I took a small position. It was, again, I'm not betting life savings when dealing with these stocks, because you have to understand, as soon as that stuff started to drop, Robinhood disabled the button. None of the exchanges worked it. Very few exchanges worked on Monday. There wasn't a lot of out of the money options. They limited a lot of that stuff. They diluted all the shares before they allowed options to be traded. I think it went up to 129. And so you have to keep in mind that they're purposely doing this stuff, and illegally. What they're doing is essentially it got halted multiple times, and it didn't even fall within the essentially the terms in which you can halt a stock. They were just halting it on purpose. So that essentially, if you put in a limit order or a market order, it didn't matter. That they were going to fill you at whatever price they could fill you at. And so this is what happens. They try to put disclosures in there just so they can, you get massive slippage is what's going to happen. So even though we did hit $80 on Tuesday morning, pre-market, it opened up down like $45, and then I think it bounced up to 55 is essentially where I got out, and then it continued to drop back off back to where I got in by the end of the day. So again, crazy play. I don't highly suggest, if you're not a veteran of the market, not to be playing these stocks or be playing very little, and just be mindful of what could happen, right? Anytime you buy, I've seen a lot of people putting massive amounts of money in these stocks, and it's not a good idea, because you don't know what could potentially happen. And just because it flies up to $80 doesn't mean you can cash out at that. And even, I know even David Portnoy was getting upset that he couldn't get out of his position, as him and Andrew Tate also took like $500,000, and they both bought on Monday nights, and on Tuesday morning they were having problems trying to get out. So again, these are all things you need to keep in mind and understand that again, you're playing against a lot of bankers that are upset and lost a lot of billions and billions of dollars in the last run up and on this particular run up. And so understand what's going on there. So again, it'd be very interesting to watch nonetheless. Even if you're not playing it, it's still very historic to watch the actual message behind it and what's actually the way these things are drawn up. So again, it's very interesting the way it is playing out, but definitely something to keep an eye on over the next coming weeks. This earnings, again, there's still a lot of really great earnings that are giving you a pulse of the market. And I said you're going to get more of the truth of what's actually going on watching some of these. And HD reported, and their net income fell 7% over the last year, with a fifth straight quarter of negative year-over-year growth. Walmart, however, crushed it despite the massive amount of theft that's going on. They're actually closing some Walmarts, so keep that in mind. And they're also laying off. So this is something you have to look beyond the numbers. And something I've always talked about is that they'll put expectations in the dirt. So all you have to pretty much do in this environment is show up. And so this also feeds into the narrative that everything is fine and dandy when in fact it's not. But again, ultimately understand that Walmart will do well because they focus more of their essentially store on essentially providing groceries, and that's where they make their money. And I've talked about people splurging on groceries, and so of course we expected Walmart to do very well. Target, however, they're more essentially selling other additional items, not just their portion of groceries is much smaller now. Over the past couple quarters, they've been trying to focus more on groceries because they know where we were headed. Again, they deal with a massive amount of theft as well, so it'll be interesting to see what they report. They do report this week, but again, you can see the things that I talk about, and when you watch these earnings, it's verbatim. It's exactly what I've been talking about, and it feeds that narrative that things aren't good, and that again, yes, inflation is going to come down on a lot of other things, but you have to understand it's because people don't have the additional cash right now to be able to go out and go to Target and buy excess clothes and grab a Starbucks while you're at it. They can't do that right now. They don't have that extra cash. They're working 3 jobs. They're busy just working to put a roof over the head and provide food for themselves. And again, a lot of people can't even do that because they're skipping meals because things are just still too high. Yet everything else is utopic, apparently. So we did get the core this week. It came in line at 3.6. Again, it's still, they've taken a lot just before the report dropped. We did have Powell talk on Tuesday just before this dropped. And I think it was Tuesday. I think they shifted. I think Powell might have talked on Monday, or maybe it was Tuesday and the report came out on Wednesday. But with that being said, I mean, he essentially wants more of the quarter. He doesn't care about one particular month. He wants the full quarter. So we only have had the first quarter. He wants another full quarter before making any kind of crazy decisions. But again, when the Fed has to cut, it's going to be reactionary. Something big will happen and will force them to have to cut. But anyway, they started taking a lot of additional higher inflation food items out of the core to bring it down. So really, did it come down? No, it only came down because you mess with the stats. And this is something I talk about all the time. This is the same thing we're seeing with unemployment. The jobs numbers that come out, they are messing with the stats. And then we see that it's getting revised down. And the last jobs report was what came down quite a bit, and so we're going to start seeing that when it hits. I've talked about this before. It's going to hit like a ton of bricks, even though it doesn't seem like it came out of left field. It didn't really come out of left field because we knew they were revising it for months on end. So, but with that being said, the core came out again. Car insurance inflation is very high. A lot of that is because of maintenance is high because people are essentially using their used cars a lot, or driving their used cars, or not buying used cars because they can't afford it. And also theft is up extremely high as well. So you got two of the biggest things in maintenance. So if something happens to their vehicle, to have to make that essentially coverage that the expenses of maintenance for your insurance is going to be higher. So the premium has to be higher, and then the amount of theft that's gone up as well. So you have two big red flags there that are causing your car insurance to go up. And then again, you got your home insurance. There's a lot of hidden costs there, HOA fees. Any kind of maintenance you're doing on your home is also very expensive as well. So again, those are the two biggest purchases a person has in their life. And right now they have a lot of additional costs associated with them. And so these are the worries and concerns that they have. And so, again, we'll have to continue to watch to see. That's just another month. We have to see what the next 2 months have in store, and then we'll really kind of be able to dictate what we could potentially do here. So, with that being said, 51% of Americans say it's a bad time to find a quality job. So something I've talked about is there's a lot of talk about ghost numbers. Again, I've talked about bringing down the full work week down to 32 hours a week, so people aren't getting paid benefits. They're just essentially working part-time. Something that was brought up to my attention as well is a lot of people are working temporary positions because they're paying more, but they're not associating the benefits, and people don't really want the benefits, especially the younger generation. They would just rather have an extra $5 than have the benefits. And so that's what a lot of people are doing right now. And you're seeing that a lot more. So this is what you're seeing again to try to combat the inflation that's currently going on. So and then the 1 out of 7 Gen Z consumers saw their credit maxed out in Q1. This is something I've been talking about for a while as well. Is I've been talking about delinquencies. I've been talking about charge rates for Discover and for Capital One are accelerating. And if you look at the historical records, the last time they were here was back in the 2008 financial crisis. And then when it hit that 5.76%, then you see a massive acceleration over the couple of months. And people are at that position to where they are one bad incident away from filing bankruptcy. And for people just have absolutely no credit, and it's heavily reliant on buy now, pay later. People are financing groceries and everything else as well because they can't afford it. And the thing is you're not really seeing this because they will not disclose the data. They aren't doing a hard credit check on people because they want people to get access to this money easy. And so if they get access to the money easy, they're just making payments. So whatever they got to do, they just make payments. But if they miss a payment, it doesn't get docked on their essentially their credit report. But on the same token, again, the interest rate they have to pay is ridiculous on top of everything. So people are just stacking up this massive amount of debt on top of maxing out their credit cards. Again, this is the last resort, is buy now, pay later. And hopefully I can, tackle some inflation by doing that. And so that's essentially where our current economy is. And so people aren't forced to have to sell yet. We're very, very close for people having to sell. And something I've talked about is when there's a flood of housing inventory, then you start getting massive price cuts. You get essentially a fire sale at that point where people are trying to reduce this price gouging that's currently going on and trying to get out of these homes. And this is something you have to keep in mind too. Even if you buy a house now, people say, oh, we can buy a house now, you can refinance later. The problem with that is that you have to essentially get an appraisal on your home value. If the market starts crashing, your home value is going to come way down and you won't be able to essentially reduce your rates at that point, because you're essentially, the value of your home's dropped by 200%, because right now there's so much inflation and price gouging that it's up to, maybe $200,000-$300,000. And then you buy a house now, and then 2-3 years from now, when everything crashes, that home evaluation is going to be a fraction of that. And it's going to take you a decade to get out of there, to be back above water. And that is what is the concerning part of everything. So with that, we will continue to watch. And something I said, we're going to have to really see what happens with headline news. And again, we're going to get into some of the upcoming earnings here. We'll give a good pulse on the market, but things are not looking good. And to say that things are going to be okay and just continue to run up, the market will continue to run until it has that aha moment to where, oh my God, we're in a recession, and this utopic view that we've been shoved down our throats is not true. Then at that point, things will get really bad. And then we'll price in a recession at that point. How far down are we going to correct? I don't know. We've priced in some. I think, like I've talked about this back in 2022, I think tech found its bottom at that point, because tech took a major hit at that time. But then we've had like a lot of rolling recessions that kind of helped to potentially alleviate what could potentially be coming. You have a yield curve inversion that's been one of the longest yield curve inversions. And every time we've been in this particular yield curve inversion, with a lot of the other data that matches up with it, we've always corrected and priced in a recession. And a recession on average drops us about 40%. So just keep that in mind. We did drop again roughly around 25, 26 back in 2022 when tech took that massive hit. But now we will see. We'll wait and see what happens. So this next week, we don't really have a lot scheduled. We do have a lot of Fed members speaking. Again, they're going to really talk about, especially with core that's come out. If the market's expecting a price cut sooner than later, so that's what markets are hopeful for. And you have to understand the market will push up on that because they're hopeful. One price cut will probably, the initial price cut will probably allow the market to continue to push up a little bit. But when we start panic cutting is when the event happens. And so we might have just an initial cut just to try to alleviate things. Just so the administration could take advantage of that on an election year. Then again, ultimately understand that, again, the Fed are going to keep it high. They want to get, Powell has made this clear. He wants a full quarter of inflation to really determine where things are at. And so again, we're going to have to be very close attention to jobs numbers and to inflation reports. Will be extremely important because we're coming to a very critical stage where we start essentially meeting that fork in the road. So anyway, so we have a lot of Fed speakers. You're going to get a lot of different opinions there. Again, none of them are really going to matter. We do have Powell doing a pre-recorded video for tomorrow. Again, if he does any pre-recordings, he's not fielding questions. It's not going to be that big of a deal. So we'll wait and see. Upcoming pivots. The next one is until monetary policy is until June 12th. That will have some forward prediction summaries in that as well. So there's asterisks. Pay attention to those because those kind of really dictate the price cuts and stuff. People are looking at those particular monetary policies a lot closer. Next core is not till the 12th. Upcoming earnings. We got Palo Alto on Monday. Cybersecurity. Old Nancy has bought a lot of call options in this particular stock, so it'll be one to watch to see how well it does. Tuesday this week, we're going to get a lot of really great pulse of the markets, obviously, and with Nvidia, that's going to really matter. Lowe's, we're going to see how bad that's hit, comparable to Home Depot. AutoZone, with maintenance being as high as it is, if you look at that stock is in the thousands. It's already crazy. So I can only imagine how well they're going to do on earnings this week, especially with the maintenance being so high. Toll Brothers will give us a good idea of what's going on with home sales, and maybe potentially even some more insight into there, where the forward guidance is going to be important there to be watching. And then Wednesday, we have Target. Again, we want to see how it compares to Walmart. I think Target will probably, depending on how well that they've switched over to the grocery side of everything, they might do really well on this earnings, or they may get slammed. So, and then Nvidia, obviously, with AI infrastructure is going to be really important. A lot of people are thinking that at some point it's going to die out. They're going to run out of resources. They very well could. There are a lot of biggest problems right now is energy. And I know there's some companies out there that are putting up nuclear plants right now that are actually just opening to try to alleviate some of these energy pressures from having to support AI and AI infrastructure. And again, a big reason why I like Tesla, because they're already in the energy business, and they could potentially even get to a point to, again, where they start again renting out their energy units for humanoids and stuff. And so you have to keep that in mind and think how Tesla is thinking, right? Like the FSD thing is one thing, and man, they're really pushing for China, and China really wants the FSD thing because it eliminates people from having to drive, cuts a lot of costs and a lot of other different things. And China is more about it than the US is. The US is more combative when it comes to that particular approach, and everybody has an opinion, and sometimes too many opinions can be too much, especially if you're trying to grow a business. And so with that being said, again, there'll be a lot more hurdles in the US than there will be in China. And so it'd be interesting to see how that does play out with AI and know where that's going. And again, that FSD thing is not even, it's not even comparable to the next closest thing, which is like Mercedes, and Mercedes is not even close to what Tesla has as far as FSD. It's not even comparable. It's not even the same ball field, like 3 ball fields away. It is completely different. So just to keep that in mind in a frame of reference there. And then again, humanoids are a whole other different industry. I mean, Tesla has 4 different companies all in one company that are just very innovative, that can just change the world just off of one of those companies. So just understand that. So Snowflake is always good one for infrastructure, and then Alpha is a good one for a new upcoming beauty products. They've been exploding over the past year, and I'll continue to watch to see how they do, especially in this type of environment. again, expected moves, nothing has really changed there. Things have been pretty quiet there, so not really um, comparable like they were last week. Like I said, there's no big events going on this week. It isn't big earnings, the front ended earnings right now, so you're not really going to see a lot unless we start getting headline news that starts selling something off. Again, a great week to take advantage of if something starts selling off heavily, like the SPX starts selling off heavily because some news drops. It'd be a great time to capture options this week if something does happen. This is why I talk about why you need to be paying attention to headline news, because if you can get ahead of it, if you can get a couple of minutes ahead of it and get in option positions for some of these, you see some ridiculous gains, some of the biggest gains you've ever seen. That to comparable to crypto, and even some better than a lot of crypto plays. So with that being said, this week, this is what we got. Shout out to Earning Whisperers again for this earnings. I just like to bring these up, try to make this video a little bit different compared to, again, the technical analysis. So again, this week, we're looking at Palo Alto. Again, a lot of really, really great earnings. A lot of this is going to give you a good vibe of what's going on with the market on here. So just keep that in mind. But Palo Alto will be really important there. Tuesday is going to be a big day for Pulse of the market. We got Macy's, which is probably going to do really bad. Lowe's is probably going to do really bad. AutoZone be really key to see how well they're doing with all the essentially with all the maintenance currently going on. And Toll Brothers would be great to see what people are doing with their homes. I want to really watch and see what happens there, especially the forward guidance out of there will be really important. Wednesday would be a pretty big day. Again, you have Target and NVIDIA and Snow and ELF. So Wednesday would be another big day on deck, especially with NVIDIA. We want to see how the market digests it. Not so much the numbers. I think they will actually do very good. But what we noticed from the last earnings cycle is they also did very good, but their forward guidance wasn't good, and the market started dropping pretty heavy off that. So just keep that in mind. So really going to be watching this one this week. I want to get a position in this. I do think at some point they may start running into some resource problems, but ultimately the U.S. will be backing this because it's a race to AI. And much like Boeing and planes falling out of the air, they will back Boeing because they build the planes, their jets. And so with that being said, NVIDIA is kind of the same case here, to where the U.S. government will support NVIDIA because we are in a race for AI. So that's something to keep in mind there as well. And then obviously Thursday, I don't really like a lot of these, but again, they give you some good pulse of the market. Workday might be one to be watching there. It might be interesting to watch. But again, a lot of these good pulses of the market, you're going to start seeing a lot of these drop out, and then whatever headline news we have, which will be extremely important. And then we also have all the meme stock stuff going on. So keep that in mind. The meme stocks typically get pretty active around this time because there really isn't a lot going on anyway. So that I'm sure we'll get more news from that as well. Again, manage risk with all these things. And remember, none of this is financial advice. If you're going to play any of these, again, understand you're going strictly into casino, and that it is pure gambling, because again, you have the markets working against you, and understand that just because it may go up by $30, you may not be able to exit that position. And when you finally do get cleared, realize you can be getting a lot less than what you actually put your order in for. So again, with all that being said, I appreciate you. If you made it this far, go ahead and drop a thumbs up, and I will see you guys on the next one.